Hey, I'm Gene Goldman, and today is Monday, January 2nd. Here's a look at the week ahead. First and foremost, Happy New Year! Well, it was a very ugly year last year for the stock market, and we're glad it's finally over. The S&P 500 finished the year down about 20%. As we look at the 2023, we're watching two factors for market direction. How will the weaker economy impact corporate earnings, and how much further does the Fed have to raise rates? This week, we get three events that provide insights on both. On Wednesday, we get the meeting minutes from the Fed's last meeting. This provides insights in terms of what the Fed is thinking. Will the Fed acknowledge that inflation is slowing? Because remember, November CPI was weaker than expected. But at the same time, the Fed's dot plot, remember that document that discusses the Fed's long-term projections? They actually revised inflation higher. Also, in the last press conference at the last Fed meeting, Jay Powell, the head of the Fed, was very hawkish. Is this going to be reflected in these notes? And lastly, we get a perspective on the recently weaker economic data, especially a lot of forward-looking indicators. On Friday, we get the two big economic reports. We get the December jobs report, and if you listen to the consensus expects job growth to slow from 263,000 in November to 218,000. Unemployment rate should stay unchanged at 3.7%, but hourly earnings are expected to slow from 0.6 to 0.4%. That's good news. Also, we'll see the December ISM Services indicator. This is my favorite. This is the first look at the prior month's economy, and it is expected to slow from 56.5 to 54.5. Remember, above 50 is expansionary. We're watching this indicator very carefully because, as we know, manufacturing has struggled, but the services side of the economy is still showing strength. And we need to get an understanding in terms of how much the Fed rate hikes are impacting services. So the overall takeaway this week, it's a very important week, especially given the fact that markets struggled last year, and we will get insight on the impact of Fed rate hikes on the economy and therefore corporate earnings. And if the economy is strong, it could give the Fed more confidence to keep raising rates. Thanks for listening. For more information, please follow us on Twitter at @SataraIM, and I'll see you next week, and thank you.